Hello, and thank you for joining us to review the 2025 benefit options available through Bliffert Lumber. Starting with your health plan options through UMR, you have two options available, one being a copay or traditional plan, and the other being a high deductible or HSA plan option. As you can see here, the biggest difference between these two plan options is the way that the coverage will be provided for any of those in-network or out-of-network covered services. The copay plan is going to have more structured, set copay amounts per service, while the HSA plan is going to be billed covered services will be billed to you first until your deductible has been met, and then your plan coverage will kick in. As you can see on the coinsurance row, that is the amount that the plan will cover once your deductible has been met. So, for example, with an HSA plan, you will be responsible for 100% of your covered services, excluding anything that's related to preventive care, until your deductible has been met. And once your deductible has been met, you will be responsible for 10% of the cost of that care. Keep in mind that routine or preventive care visits are 100% covered on both plan option. If you do have additional services provided in those preventive care screenings, such as a lab or blood work, those may be billed to you as technically they would be additional services resulting out of that preventive care visit, but the visit itself would be covered at 100%. Moving to a few additional notes here, the differences between your copay and HSA plan in regards to inpatient and outpatient hospital services, as well as emergency room visits. Keep in mind, if you are on an HSA plan, emergency room visit can get very costly. While you do have that deductible threshold, in many cases, those emergency room visits can be upwards of thousands of dollars. And so you want to be mindful when you are seeking urgent care, whether it's truly an emergency room need or if you can potentially schedule an appointment elsewhere. So keep in mind on the copay plan, that emergency room visit would be a $350 copay. And then additional services from there would be hitting your deductible. In terms of your cost for these different plan options, your premiums are listed out here on a weekly basis. As you can see, the HSA plan is more cost effective on a premium perspective because there is a larger cost share on your behalf with that plan, seeing that all covered services are going to be hitting your pocket and your deductible before the plan coverage kicks in. So it's not unusual to see that the premiums on an HSA plan are lower than that of a copay plan. Here we're going to jump into a couple of examples, again, just to illustrate the way that these different plans would be covering the expense of care. For example, if employee Peg is having a baby, she may be billed $20,000 by the hospital or healthcare provider that she's visiting for prenatal care, ultrasounds, blood work, and actual childbirth. So on the copay plan, the provider would bill the $20,000. PEG would have an individual deductible of $3,000, and from there, her co-payments and co-insurance would kick in for the additional covered services up to from that $20,000 bill from the provider. So keep in mind, these are listing out the single deductibles and single premiums. So if you're on a family plan, just note that those numbers may be higher or would be higher. But in terms of the total cost for these services, so same exact services at childbirth and all of the visits that are needed before and after the childbirth are included here in the $20,000 provider bill. The cost that this employee would be paying based on the type of plan that they are on. If Peg had elected the copay plan, her total cost from that $20,000 bill would be $5,000 because that's covering her deductible cost as a single. It's $3,000, and then the copay and coinsurance. If we're looking at the HSA plan, her total spend of that $20,000 provider bill would be $7,000 because her deductible is $5,000, and that would be fully met with the cost of this care, and then her coinsurance would kick in for the remaining amount. So her total spend from a plan perspective would be $7,000 on the HSA plan and $5,000 on the copay plan. Keep in mind that you would also include her annual premiums in that annual cost, which gives you the totals at the bottom. So again, on the HSA plan, the premium cost is going to be lower, but your cost for the care that you're being billed for, that may be higher. Here's another example. Employee Sally has an ear infection. Again, we're going to assume that she's enrolled on a single plan and is being billed $300 from her provider. So on the copay plan, she's going to experience that flat copayment as well as the prescription copay for that generic medication that she's prescribed following her visit. So she's going to have a total spend for this ear infection prescription of $40. If she were on the HSA plan, her total spend for this visit and for her medication would be $304 because again, she's responsible for 100% of that in-network covered service cost until she's met her $5,000 deductible. So she's going to be responsible for the full cost of this visit and the generic prescription prescribed. So keep in mind, again, the annual premiums are going to be lower on the HSA plan. So if this was the only visit that Sally experienced, aside from preventive care throughout the year, her total healthcare spend would be $1,900. Whereas if she were on the copay plan, her total spend for the year would be slightly higher because she's paying more in annual premiums each week. Another very exciting update on the medical spend front is the pharmacy benefit plan through Smith RX. This is a new partner that we will be working with in the 2025 year that will essentially operate as a negotiator. So Smith RX is going to pull any of those prescriptions that you are currently on or being prescribed in the future and will essentially find the lowest cost option. So really working as a benefit to you, the end user, as well as your employer in really mitigating those additional costs by just doing some behind the scenes research. So it'll work the same way that any of your pharmacy benefits have worked in the past. You'll have an ID card coming in the mail, and that's what you'll provide to your pharmacist when you're picking up those prescriptions. But again, this is going to really help to mitigate some unnecessary spend on high cost medications, as well as continuing the benefits of using a mail order pharmacy option as well. Just a couple of notes to consider as we transition. We want to make sure that you always have a full supply of your needed medication on hand. So make sure that you are refilling prescriptions in advance so that you're not running into delays that would impact you being able to continue on those medications on the schedule needed. And we do recommend that you call the pharmacy before picking up those refills so that you can give them the new Smith RX plan information. And if you are refilling prescriptions or filling new prescriptions, Allow for a 3 business day window just so that we can ensure that there aren't any hiccups with picking up medications. A lot of times we see confusion with pharmacies when you're switching to a new plan. So, really important that you give a couple of days just to make sure that that transition is smooth. Jumping into HSA accounts, you will have the option to contribute and receive an employer contribution towards an HSA account through Associated Bank. Just as a reminder, the annual contribution limits have increased for the 2025 year. So if you are enrolled on a high deductible plan, you are eligible to contribute toward an HSA. If you are selecting the copay plan, an HSA is not something that you are eligible to contribute towards. So keep in mind that this is only going to be applicable to individuals enrolled in the high deductible health plan. Your maximum contribution limits are 4,300 if you're on an employee only coverage tier. And if you are enrolled with a spouse, children, or both, you would have the $8,550 limit for the year to contribute towards that HSA. For those who are age 55 or older, you are eligible to contribute an additional 1,000. So essentially just adding 1,000 to either the individual or family coverage limit. Just a reminder of how HSAs work and what the advantage is. This is a Section 125 or pre-tax option. So you are able to contribute funds on a pre-tax basis. You are of course, saving taxes on those funds that are in that account as the money is growing. And then as you're spending, it's tax-free spending as well for any of those qualified medical expenses. And there are investment opportunities available for those who are keeping those accounts open. Post-retirement, there are some great opportunities to really invest those tax-free dollars. So again, just a reminder of the tax implications of an HSA plan versus, the way that we think about 401k plans. Um, Again, all great options to take advantage of and certainly encouraged. In terms of who owns the HSA, of course, we hope that you never leave your employment with Bliffert, but know that should you do that, you will be able to continue that HSA account through any future employer. That account is yours to continue to use and keep open. You can continue to fund that account. It's individually owned. So just know that that account is yours forever, and the funds roll over. So unlike a flexible spending account or FSA, the HSA will allow for you to continue to keep those funds that you've contributed. They'll roll over year, so you are not losing any funds or having to quickly spend towards the end of the year. Really important that you have a beneficiary linked to your HSA account the way that you would with a 401k or any other, savings vessel that you have. Definitely important that you elect someone to receive those funds, that someone that you trust, your spouse, your children. If you have a trust or an estate, you can always delegate that vessel or beneficiary, I should say, to receive those funds in the event of your death. Talking about the HSA and qualified expenses, so how can you spend this money? You're able to spend HSA dollars on any medical plan deductions or coinsurance. So keep in mind if you have the HSA plan that you've elected, let's say you're Sally, you had the ear infection and it was a $300 bill, you could use your tax-free HSA dollars to pay that $300 bill. Same goes for, any coinsurance applied to a provider visit. You can use that to pay for medications. You can use that for a number of other, health related items. So, think even things like sunscreen. You can typically use your HSA to cover the expense. If you do have specific questions, just know that there are a team of individuals happy to help you in understanding and fully making the best use of those plans. So here's their availability. There is an 800 number, and there's also an email address. You can reach out to the team at Associated via either of those methods. Jumping into your dental insurance coverage, we are continuing with Delta Dental, and the deductible limits are 50 for a single and 150 for yourself and spouse or family. Again, with the coverage levels, anything that's preventive, if it's in network, will be 100% covered. If you're out of network, you're looking at 80% coverage, and then kind of goes down from there based on the type of service that you're receiving. So any major services are going to be covered at 50%, both in and out of network. Keep in mind that the annual benefit maximum is a little bit different than how the health plan works. So that $1,000 per person is going to be the annual maximum amount that Delta Dental is going to pay, which again, on a health plan, your annual max is typically what you are responsible for paying. So just keep in mind that that maximum benefit is the maximum that Delta Dental will pay towards any covered services. And then you do have orthodontic coverage with this plan as well. For vision insurance is with Delta Vision. So that's the iMed provider network, very expansive network. So you shouldn't have any issues in finding a covered provider or in-network provider. Your frames are eligible every 24 months, and then your typical annual exam every 12 months. That annual exam does include lenses, so keep in mind that you can still have those annual visits. The frames are just every 2 years instead of 1 year. This does include contact lenses as well. So for those who are not using eyeglasses or frames, you still have coverage for those contact lenses. Your life insurance is a benefit that Bliffert Lumber generously pays 100% of the premiums for. So this is a plan through Mutual of Omaha, and this is a $15,000 life insurance policy and accidental death and dismemberment policy. So keep in mind, again, this is not something that you are having to pay for or enroll in. If you are a full-time benefit eligible employee, you'll be automatically enrolled. There is a benefit amount reduction as you age. So once you hit age 65 and then at age 70, those benefit amounts will reduce by the percentage listed here. But again, this is a great benefit that your employer is generously providing, and this will provide a $15,000 lump sum benefit in the event of your passing. So as a reminder, what is the value of this life insurance policy? Well, it's going to cover any immediate expenses that your loved ones would be incurring following your passing. So think funeral, any maybe outstanding medical expenses, if there are just regular bills that are needing to be paid. And of course, with one less income, that can be a stressful time for loved ones. And so this is a great benefit that they can receive to assist in the cost of these end-of-life expenses. You also have the opportunity to elect voluntary life insurance. So this is something that you can elect not only for yourself, but also for spouses and children. Keep in mind that the guaranteed issue means the amount that you are guaranteed to be enrolled in without having to provide any additional evidence of insurability or essentially a medical questionnaire. So, your increments that you can elect would be increments of 10,000, and that's $10,000 in benefit amount, and then 5,000 for a spouse, 2,000 for children. Keep in mind there are some maximums that come into play with this plan. So you are eligible as an employee, full-time, benefit eligible. You can elect 5 times your annual salary up to a maximum of $300,000 in benefit amount. Keep in mind if you're electing, let's say, 150,000, you would have to provide that evidence of insurability because it's exceeding the guaranteed issue amount of 100,000. So great benefit to consider, again, just to assist your loved ones in the event of your passing. Short-term disability is another plan that Bliffert Lumber is covering the cost of for all full-time benefit eligible employees. This is a great benefit in the event that you become injured or ill, or are, taking a maternity leave. This will provide you with a cash benefit during that short-term period where you are unable to work. So this is going to cover 66% of your regular earnings up to $300 per week. And if you are injured through an accident, the benefits will begin immediately. For things like sicknesses, that benefit amount would begin on the 8th day of that illness. And then the duration is a maximum of 26 weeks. So again, a great supplement to your income while you're out and unable to work. You do have a voluntary long-term disability plan available. If you wish to elect that, that would cover 60% of your regular earnings up to a maximum of 5,000 per month. This is going to be applicable post short-term disability. So let's say you had a very severe illness that required you to be out or unavailable to work for more than 26 weeks. This long-term disability is going to kick in once that short-term disability ends, and again can continue, supplementing that lost income while you are disabled. That concludes our presentation. Thank you so much for joining, and have a great 2025.